Hello, everyone. Today's guest is Asher Genoot, the CEO of Hut8 and board member of American Bitcoin, a venture he launched in April that was backed by Eric and Donald Trump Jr. Asher is a massive player in the Bitcoin mining industry and is on a mission to become the world's most efficient pure-play Bitcoin miner with a strategic reserve. A lot to discuss here today. So Asher, welcome to the show.
Thanks for having me. Excited to be doing this in a beautiful, beautiful scenery and background as well.
It's not that bad, is it?
It's not a green screen, guys, I promise.
Yeah, right. I think we might get a little tan, but it'll be good. It'll be for the show. To start off, can you tell us a little bit about what crypto in America means to you?
Crypto, we see as a next frontier of how people manage their wealth, their finances, and how they transact from person A to person B. And the US has always been on the front lines of really setting the precedent of the global financial systems and markets. And when we think about crypto, there's the macro perspective and then there's the kind of bias perspective. The macro perspective is a new type of financial ecosystem that empowers the individual and the human to actually be able to control their finances, transact as they see fit. And we actually had a meeting earlier today where I was telling the story when we started our company, we had all of our money in our first financing raise at a bank and we got debanked. And for like 60 days, we couldn't pay anyone because all of our money, they said, well, we'll send you a check in the mail. And we just didn't have any funds. So I think the idea of giving people their financial freedom back is what crypto means to me. And then the bias perspective is when I think about crypto, obviously we build massive infrastructure projects for Bitcoin mining. So I also see an ability to build real infrastructure that is the backbone of this cryptocurrency ecosystem within the US and having it grounded in America.
Yeah, I mean, we've had guests on before who have talked about being debanked, and it's just a horrible and crazy situation. Like, then you have to go tell your employees for 60 days, hey, we're waiting for a check, and they have to trust
for us,
you.
it was even worse in that we started the company. We did our first like large financing at the time. I mean, it was like $15 million, which for us was an unbelievable amount, right? Today, we're doing multi-billion-dollar scale projects. So we've progressed a lot since then.
What year was this?
This was end of 2020, early 21. And one day we just get an email saying your bank account shut down. You'll get a check in 30 to 60 days in the mail.
What bank? We like to bank shame on Crypto America.
I won't throw them under the bus. But I won't throw them under the bus. Yeah. But it was a really, really bad situation. Yeah. And the problem was we raised the capital to invest and buy miners. And so we had our employees, we had supply chain, we have partners, we had deals that we were closing and everything. And again, you're a startup, so people are like, do you even have the money? We're like, we have the money, I promise you. I would show you the screenshot of the bank account if we could even log into this thing.
Right.
And it was a really tough time. And I think that was like our opening into this ecosystem where we came from a very traditional background building businesses not in the crypto world. And we came in and within the first month, we lose our bank account and all of our funds are locked up right after we close our financing. We're like, what the heck is going on here? And I think dealt with that a lot throughout kind of 21, 22, 23. We started a company called US Bitcoin Corp, which ended up being the largest kind of private miner in America. And we merged with a company called Hut8. But that process, we started in the beginning of 2023, and we only got through the SEC approval by the end of 2023. Whereas in this time around taking American Bitcoin public, we launched in April, or we launched in the beginning of April, we filed in May, and we went effective a couple of weeks ago. Now we're going through the shareholder vote and hope to be listing in beginning of September. And it's just these regulations, like government agencies, these regulations, I think the mindset now is how do we make sure we safeguard and protect investors and people, but at the same time, how do we promote growth and building of businesses where a couple of years back, it was just, I mean, it just felt like everything was trying to like, it was like trying to walk through a maze. We're getting shot at all directions. You're trying to dodge and they're just trying to kill you. And so it's been a wild ride. And I think just grateful for the environment we're in today. And no matter where I go in the US, from Texas to Louisiana, I mean, people are so excited about America. They're so excited to build, whether it be in crypto, whether it be in manufacturing, whatever it may be. But there's this revitalized sense of kind of building in America.
Yeah, I think it's been a huge shift going from defense to offense too, right? I know, yeah, I like the sort of Matrix, like Neo analogy. I used to tell people being back in the space in 23, or, you know, you had exchanges collapsing, you had the debanking issues, you had all these kind of things coming at you, and it was like, just get to the next step, get to the next milestone. And on that defensive front, I know Michelle Bowman is out here this week talking about removing that reputational risk from the banking guidance. And it's always been interesting to me that crypto got lumped together with, one of the questions she faced was like, well, what's different about it than gambling, or even like whether or not a legal marijuana dealer should be able to get a bank account or a checking account or something like that. Why do you think that stigma existed maybe in the previous administration? And then what do you think is really compelling all these like interagency sort of cooperation on really kind of welcoming us, sort of back into the fold?
I think it's easy to villainize complex concepts and create a following of support behind them. So if we talk about Bitcoin mining, a couple of years back, it was embarrassing to people, hey, I want to go invest hundreds of millions of dollars in your community and build a Bitcoin mining facility. Because people would be like, no, not here. You can't. You're going to consume all of our power. You're going to destroy everything. When the reality is, all of our sites are located in areas where power prices are extremely cheap, because that's our biggest operating cost. And they're cheap because there's no local demand. They're cheap because the people who build power generation facilities are losing money and curtailing, having negative price power. And so by bringing these loads there, we're actually able to make the economics a lot more viable, and we're able to curtail, unlike kind of traditional data centers where if prices are high, we shut down. So when people actually need the power, we're not even online. But it was so easy to just say, this is bad. This is bad for the environment, this is bad for the country, and then people were able to build a following and a base around it on just that kind of agenda. And I think as people learn more about what exactly that is, I mean, if you think about cryptocurrency today, like when people think about Bitcoin, they think about how much is Bitcoin relative to the US dollar. When they think about the Genius Act and stable coins, that is a massive US dollar export opportunity. And so you have the ability to really strengthen the US dollar and its dominance around the world through cryptocurrencies, rather than this new technology is coming and it's going to disrupt and change everything. Will it come and disrupt some of the banking systems? Yes. But Robinhood also got rid of fees for being able to buy stocks. And I think everyone's happier, better, well off with that. And now everyone's gotten rid of those. And so I think like people who try to stock technology and innovation have always failed, and technology and innovation has always succeeded. It's just a matter of how long it takes.
Right.
And I mean, even earlier today, we had an opportunity to chat with the SEC chairman, and I was very open. I said, look, a couple of years ago, if I had an opportunity to meet you, I would say, no, stay out of sight, out of mind. I don't ever want to meet you in front of you. And today I have the privilege to ask you, hey, we're thinking about doing these things. Like, how should we think about this? Because if you give us the right guardrails, the regulations, we'll go build great businesses. But when you create ambiguity, then that creates an inability to go build. In America, and I spoke with, when we were raising capital for American Bitcoin, I spoke with this group of entrepreneurs that sits on like $800 million of Bitcoin. And they created one of the first exchanges, and they said at their prime, they had 3x the trading volume of Coinbase. And they were former Microsoft and Amazon engineers. Wow. And ultimately, the company got on the SEC's radar. They went after them. They tried to settle and essentially put them into bankruptcy. And what they told me, they were like, everyone told us to go abroad and go build this business abroad. And we said, no, let's build it in America. Let's build it at home, and we'll just do things the right way. And no matter what they did, nothing was the right way. Yeah. And now their biggest regret in their life is not having gone built it internationally. And I think this new administration, this new wave, this new kind of philosophy of how do we bring businesses back to America is not only not having great entrepreneurs leave, we're having people come back to America to go build great businesses. And honestly, I'm so grateful and happy to be an American.
I don't know if you all have noticed this recently, but Avalanche has been on a roll. From FIFA launching their own Layer 1 on Avalanche, to VanEck unveiling the purpose-built fund to back ecosystem projects, the world is watching and building on Avalanche. Web3 gaming? Avalanche-based titles like MapleStory and Off the Grid have it covered. Finance? Avalanche has got that down pat too. Entertainment? Built for that as well. On top of that, starting in 2026, Sports Illustrated Stadium will be the first major sports venue to fully adopt blockchain ticketing powered by Avalanche. Backed by a strong network of builders and dedicated community, the momentum is accelerating on Avalanche for games, music, sports, finance, and more. Want to see how Avalanche is driving adoption? Go to avax.network and check it out.
You talked about that contrast between the persecution that you felt in the prior administration, right? The Biden administration under Gary Gensler, you felt you couldn't even go and have a conversation. Now you're meeting the chair of the SEC out here in Wyoming at a blockchain conference, right? The change there is just incredible. But you did mention the Trump administration and how they really have welcomed this industry with open arms. And you personally have a relationship with the Trump family, with Donald Trump Jr. and Eric Trump. You've worked with them. You are a business partner with Eric Trump. Can you walk us through that relationship? How did that start? How did you and the Trumps come to be in business together?
It was very serendipitous because when we first met, it was through mutual relationships and friends and colleagues. And we just started talking about it. I just had curiosity, like, why are you guys so passionate about crypto, right? If you go broadly, they tell their story about debanking as well, actually, and how that brought them into this world. And there's all this media of like, oh, they're just trying to make money and they're just trying to take advantage of the opportunity. And so I really wanted to understand, like, why are you passionate about the space and what is your deep and intrinsic, true kind of drive behind doing what you guys are doing, being public advocates and spokespeople. And as we dove deeper, like Eric and I just like really clicked because our business sits in the two worlds that he lives in today. You have the Trump organization that he runs, which is their golf courses, their hotels, their real estate portfolio. He runs that whole business, right? So that's real physical infrastructure and assets. And he grew up in that business. And so we nerd out about everything from like HVAC and electrical, and because he grew up on a construction site. And then you have what they're doing with World Liberty, which is like full DeFi and in that universe, where American Bitcoin kind of sits in the middle there. American Bitcoin has real data center infrastructure and footprints that you can feel, that are tangible, that are the backbone behind the security of the Bitcoin ecosystem. Then you have this treasury element and you have the store value element of, can this be a digital gold? Can this be a new way to transact? And so we really jammed on Bitcoin and mining specifically. And then the conversation evolved very, very quickly. And they were building a business called American Data Centers. And I said, look, we've already built the full foundation of what you guys are trying to build. So why don't you join us together and we can actually now accelerate the pace in which we're growing rather than have two separate businesses and you guys having to build the foundation and just start where we're at and let's go scale and build. And we saw that with American Bitcoin, right? It has scaled incredibly fast. We're excited to debut American Bitcoin on the NASDAQ to the world, excited to share how much Bitcoin we've accumulated in a short period of time, how much we mine every single day. And so it's been an incredible amount of growth and we're very, very excited. And we truly, truly do believe we can create a trusted company where the everyday American can say, you know what? I want a small percentage of my exposure into Bitcoin. And this is a trusted company that I know will focus on driving Bitcoin per share and shareholder creation up. And our metrics are not how many exahash do we have, how much Bitcoin do we mine, how many Bitcoin do we have on the treasury, like none of that matters. All that matters is how much Bitcoin per share does a shareholder have and are we increasing that month over month, year over year, and so forth.
Mm-hmm. I have a question in regards to the relationship with Eric and Donald Trump Jr. who are involved in American Bitcoin. Like, what are their roles on a day-to-day operational standpoint? And then of course, there is like the name brand, the name equity that comes with it, but what else do they really bring to the business for you?
Yeah, people would be surprised. I mean, they're so involved. I speak to Eric multiple times a day. He actually called me right before I came. He's coming tomorrow. Yeah. He's coming tomorrow. And so incredibly involved. And this was one of the things when we started the partnership, it was funny because one of the questions I asked like 15 times, we're like, how much are you really going to be involved when we launch this, right?
Yeah.
Like, are you going to be basically a spokesman partner or are you going to be a true operating partner with us? And I think for us, we were very privileged and fortunate to have built a very large business and being a leader in this space. And like, we didn't want just a spokesman, right? We've had opportunities to partner with celebrity endorsements and so forth, and we didn't want that. We thought that based on like his background and his belief in the ecosystem and being a spokesman for the ecosystem and his interest in the real estate side of the business, we said there could be a really strong synergy here and we can kind of exponentially grow the business and the opportunity, especially as we were looking at carving out the Bitcoin business out of Hut8 and having Hut8 focus on energy infrastructure and having American Bitcoin be the Bitcoin company. And so, I mean, fast forward today, they joke around all the time. They're like, you doubted how involved we are. We're probably way more involved than you want us to even be, right? And like, I mean, he calls everybody, he's like, how many Bitcoin did we mine today? What is our next step in acquiring more exahash? How are we thinking about our treasury strategy? We had a full day, 9-hour strategy session where Eric, Don, me, Mike, Matt, we were all in the room talking through the roadmap over the next couple of months and what our goals are for the end of the year and what our ambitions are. And so we've really been fortunate to find great partners who I think for us and for them, this has evolved into something that we're all deeply passionate about. And you'll see this in Eric tomorrow when he speaks. Like, I think our passions in the business have grown from the initial day we said, let's do this, to as we've gone through and we've executed over the last couple of months, and as we go into our NASDAQ public debut, everyone is more committed than ever, and we see that on a go forward. And I mean, another thing for shareholders coming into this, like all of us, Hut8, Eric, Don, all of our shares are locked up for a year at a minimum from when we go and we list. Right? So no one is selling. Everyone's a long-term shareholder. Everyone's a long-term holder. And like, we really want to build the foundation for a great American business.
Bitcoin might sound complicated, but the Gemini credit card makes it simple. Use it like any credit card. Buy lunch, gas, or your weekly groceries, and you'll earn up to 4% back instantly in Bitcoin or one of over 50 other cryptos straight to your account. No annual fee, and right now you can grab a $200 Bitcoin intro bonus. It's the easiest way to start building your Bitcoin stash. Go to gemini.com/CIA to learn more. Terms apply.
I want to ask about the decision to go public. I think it's a strategy that's been executed by a few miners, right? But now we're seeing a lot more digital asset, treasury companies. I think that's probably going to be, a sort of a topic of the day as people are talking around here at the conference. We've been approached about those strategies, and you're really seeing a broadening of participants around that strategy. Maybe it's got legs, maybe it's less operationally efficient over the long term. How do you guys think about your decision to go public as an operating miner versus some of these treasury company strategies that we're seeing come out now?
Our belief is that we've structured American Bitcoin to be the best Bitcoin accumulation vehicle. And the reason that is because we took the best out of mining, we took the best out of treasury companies, and then we have a third layer to our ecosystem, which is the brand and with the products that we believe we can launch with the brand. So I'll kind of go through those in lockstep. As a mining business, the reason why investors bought stocks in mining companies was the same idea of, instead of buying just Bitcoin, I can get a levered return and I can mine Bitcoin at a discount. I think what ended up happening a lot of the times is companies got rewarded for just growing the amount of exahash and compute that they had. And it wasn't about what is your return on that investment. It was about how much exahash do you have? And a lot of the times those investments were done at the detriment to the return profiles because people wanted to be the largest. They wanted to say, and a lot of people support that until they kind of looked under the hood. And so we said, like, what matters most is when I buy a machine that generates Bitcoin, how many Bitcoin could I have bought instead at that moment in time? And by the time I retire that machine, did I mine more or less Bitcoin than that moment in time? And
like
that's
a hurdle
positive.
Rate.
Exactly. That's your hurdle rate, right?
Yeah.
It's a Bitcoin denominated hurdle rate.
Yeah.
And so from a Bitcoin perspective, like, the issues with mining companies and putting it all together in the same stack, and that's why we thought about carving the businesses out. I mean, it's taken a year and a half to really think through the right optimal kind of relationship to make this successful. Is historically you had companies that were like hosting businesses that had machines, they had third-party people that they hosted with, and it has never worked. Every company that has happened has ended up in lawsuits, has ended up in bad economics, bankruptcies, and so forth. And the reason why is the person building the infrastructure in the data center wanted Bitcoin returns. And so now the person actually hosting the machines are having to pay exorbitant fees to host. They're getting fixed kind of energy costs. The person providing the fixed energy cost has a variable cost on their energy rate. And then the revenue is also variable based on Bitcoin and hash price. And so you have these misaligned incentives that have created a lot of friction and disputes when you have kind of these variables mismatched. And so when we created American Bitcoin, we said, you know what is a symbiotic relationship with American Bitcoin and Hut8? Obviously, Hut8 is a major shareholder, so there is a natural incentive to want to see American Bitcoin do really, really well. And then the commercial relationship with the two is number one. Many Bitcoin mining companies have a very large SG&A. They have a huge burn rate. And we said, we want shareholders to believe that the majority of dollars that we raise go directly into Bitcoin accumulation and driving Bitcoin yield and not into the fixed overhead. So we said, Hut8, we have 250 people on the company. We're growing pretty quickly. Like, we will be the back office functions for American Bitcoin. legal, accounting, HR. We will provide these functions and we'll charge them on a variable pass-through rate. So this month you use 10%, next month you use 30%. We'll pass those through so you don't have that fixed overhead cost. So that's just like a simple shared service agreement. No one else would ever do that, right? You're like, why would you share? So for Hut8, it's great because we offset some of our SG&A. For American Bitcoin, it's great because now you have a much leaner ability to flow in and out of SG&A as different deals come up and as you need it when earnings comes or whatever happens. The second is the co-location agreement. Hut8 invests and builds data centers. American Bitcoin invests into ASICs. It signs a co-location deal that's a triple net deal. So think about a real estate property. American Bitcoin controls the energy, pays that directly. They control when they're online, offline, when they're curtailing, how they're making money on their energy. And they control what they want to do on their operations, everything. We just build the physical infrastructure and they come in and they run it. And so you don't have these misaligned interests of us wanting to curtail at times because we have a different revenue stream relative to what we're making. We just say, you know what? We're investing in this real estate. We have a fixed return hurdle that we're trying to meet. And then everything else you guys manage as a vertically integrated operator. And so now, from an American Bitcoin side, I don't have to go spend $100 million on chips and then there's an extra $20 million on the infrastructure because that $20 million is kind of wasted because it doesn't drive more Bitcoin return. And so now in this structure, American Bitcoin shoots for like a 2-year payback on its chips. Hut8 shoots for a 4-year payback. So it's way more creative for American Bitcoin to not invest in things that drive a longer return and invest in shorter returns. And then thirdly is there's a management agreement. Think about like a JLL or CBRE, where like you hire them to come and run your facilities and whatnot. So we have that agreement. And so this creates a symbiotic relationship where you have this pure play miner that has pure play vertically integrated economics. Like in Q2, American Bitcoin's cost to mine a Bitcoin on energy was sub $40,000 a flow, right? I mean, you're essentially, instead of buying Bitcoin at 120,000, you're buying at a 60% discount, right? All in, including these different fees of co-location managed services, we're still sub 60,000. So you're still 50% discount from where the market is, right? And so that's like a very simple way for investors to say, all right, instead of buying at the market, I get to buy it at a discount to the market. And so that's the mining business. Like we really rethought the whole business and said like, how do we make it work with the ability to have the synergy with Hut8 and the benefits of both sides and creating a symbiotic relationship. On Treasury companies, similar. Michael Saylor is the godfather of this ecosystem, right? Yeah. They are on another caliber of Treasury companies compared to everyone else. They have $70 billion on the balance sheet. They're able to create fixed income products and yield products that newer treasuries can't do. So you have to have a different strategy. The strategy that they implemented, which was equities via the ATM, go raise convertible notes at 0% or very low percent interest and be able to grow that yield. Like if everyone does that, there's no competitive moat there. The reason you trade out of multiple to net asset value is investors believe that you'll be able to generate yield. If you can't do that, then you'll trade at par, or if you have SG&A, you trade at a discount because you're actually a liability, not a value creation. So I think for a lot of these treasuries, it comes to like, what is your competitive advantage to drive yield for your shareholders? And have you shown that and have you been able to execute and deliver on that as well? You see all these companies coming out, people invest in the first like seed round, the thing goes parabolic, and then a lot of them have pulled back because that's the natural folks who invested early. And then now you have it in the open market and people are starting to figure out, all right, what is your competitive edge? So treasury companies, the metric should not be how many Bitcoin do you own and how many Ethereum or Solana, whatever it may be. It should be how much underlying Bitcoin or Ethereum or Solana are you increasing per share for your shareholder? Right? Because otherwise you'll do everything you can to just increase that top line number, even if it's not suggestion with the shareholders. And so I think all of these businesses, there's a reason shareholders had demand for these products. There was a desire of what they could provide. Can we take the best of all of these worlds and create this overall Bitcoin accumulation vehicle that helps drive that? And then we can ebb and flow into different times. There might be a year where mining is not a good time to invest. Machines are too expensive, hash price is low, there's unpredictability in energy rates. And you say, you know what, let's just stay put. Our mining business, we'll just keep it running. We don't need to invest more into it. Other years, capital is really cheap, interest rates come down, the treasury strategy is really, really great, right? And so the ability to ebb and flow between these strategies, I think, is critical to our competitive edge. And the last one is like, we deeply believe that we will build a household brand, and we have the greatest name in the world, like American Bitcoin. These are the two pieces that we care most about. And so can we start looking at partnering with people to create product offerings that people can trust and say, all right, where do I store my Bitcoin? Is there a trusted place to do that? And so we can license that our brand and the trust that you do all the diligence, and that becomes yet another stream of ability to add Treasury onto the balance sheet.
Are you saying you guys are going to get into custody?
No, I'm not. I'm
Okay.
saying we have different.
It's like breaking news.
Breaking news.
we have
Scoop.
different partners that we work with today, and they're like, hey, are there opportunities for us to joint venture together and instant product offerings? So in early exploratory phases, I think for us right now, the key is be a major player in building this this business, create a strong foundation of shareholders, grow a really strong brand that people trust, and then being very judicial about how we use that brand to continue to build on trust and be thoughtful to people who have lent their trust to us.
Asher, you talked about the ETH intros, and I feel like right now the demand is just off the charts for everything across the board. I would argue we're still in a pretty good bull market, but when it comes to Bitcoin mining and then digital asset treasury strategies, where are you seeing more demand or tension? And then when do you kind of see a pullback? Do you kind of like try and level out the field, or you would actually go all in on one side versus the other?
That's at the moment in time, right? So on the Bitcoin mining side, if you think about a traditional investment cycle historically, as a miner, you would say, I want to go invest in this new facility. You pay one of the manufacturers for these ASIC chips that generate the Bitcoin, and you pay them like 9 months before the facility gets delivered, you lock in your allocation. So you have all this money just kind of sitting out there, and then you go and you build out the site. And then 9 months later, who knows what happens? Bitcoin volatility has gone down recently, but still volatile, right? And so like you're underwriting for a decision where you have energy and Bitcoin prices as in difficulty, as a massive volatile variable. By the time you actually plug in those machines, does your investment underwriting still hold? So we run like massive sensitivity analysis. We have a lot of data, everything down to like the chip level of like how many chips is TSMC and Samsung producing, how many wafers is that created, that meaning how many Bitcoin machines could there be produced, to really try to create a predictivity analysis on like where we think the market is going. And so I think like what we did in that business is we worked with Bitmain and we said, hey, you guys are the customer for Hut8 on data center. You deploy the chips. American Bitcoin has the ability to buy you out and immediately turn on chips. So instead of spending the money, waiting 9 months to start generating a return, we spend the money and tomorrow we can start generating that return. That has fundamentally changed the investment risk and the return profiles of those dollars going out the doors and the time span in which you're doing so. And so that's a model that we're doing at Vega, which is our Amarillo site. That site's 205 megawatts. It has about 2% of the global Bitcoin mine in the world in that facility. It's the largest compute in one single building in the world. So we're very, very excited out of that facility. So we'll continue to innovate and things like that. But if machine prices go up and hash prices go down, we'll work within, look, we have consistently been a large customer for these manufacturers. And so I'm comfortable enough to just call them out under BS and say, this price doesn't work. This is what the payback looks like. I know what your cost profile looks like. And so the relationship has become much more of a partnership than a sales customer relationship. And at times, like the economics of buying a machine are just higher risk than the reward is worth. And so you just pause and you wait. Last year, when I took over as CEO of Hut8, I got ridiculed because we had the oldest fleet in the market. People were like, buy a new machine. And I was like, no, like new machines are coming out at the end of the year. And what that means is all the current machine prices will get compressed, which because it'll get a one generation older and we'll get a much better return payback. And we can just optimize our energy costs and we can still be profitable. And so we had similar margin profiles to our peers, even though our machines were 2x old. And then we launched a new fleet upgrade at the end of December, and then we spun that into American Bitcoin. And so it's like having conviction on what is your guiding principle. And our guiding principle is to generate Bitcoin per share for the shareholders of the American firm. And every decision we make drives back to that. And if it in all these other vanity metrics at the time, because you get a lot of shit if, and excuse my language, I don't know if I'm allowed to say that on this podcast.
Yes, you are.
You get a lot of shit if you don't do what the market perceives is the right thing. But like my conviction is I live and breathe this ecosystem. Like we know so much more about every nuance of these pieces on where we're operating on the energy markets to the supply chain on Bitcoin mining, that like we need to do what we believe is right for shareholders. And at times we'll be wrong, but if we're right more times than we're wrong, which we've been successful at Hut8 since I took over, like we'll build a great business and we'll build more and more trust with people that believe in us. And look, when I came into Hut8, we just merged with our company, US Bitcoin Corp. We had a short report. The stock dropped to like $6 a share. People hated the company because we merged with Hut8 because they had Bitcoin on the balance sheet. They did not have a good operating business, and that's why they merged with us. And so when we came in, people didn't know who the heck US Bitcoin was because we're not very big into press if there's no need. Like I have no ego. Like as we go public, we need people to know about the company because we have a public shareholder base now. When we're private, there's no benefit, right? That's why American Bitcoin, we've actually been very low key on like being out there. We have a couple like on stage performances that we've done and when we actually launched, but since then, like been quiet on like how many Bitcoin have we accumulated, how much have we grown Bitcoin mine, and like there's no benefit right now because our shareholders are private. So we communicate with them. Once we're public, that will change. And so I think when we took over Hut8, the stock was at like $6. Institutional ownership was like sub 10%. And people just didn't have confidence in the business. And fast forward to where we are today, institutional ownership is at 50%, so 50-50. The stock is in the 20s, right? So we have over a 300% increase. And more important than all of that, like when we talk to shareholders, they saw us being patient, telling people our vision and sticking with our conviction. And luckily, all that has really played out. And they're a really great business at Hut8. We rebranded the company. We spun out American Bitcoin. And we've built the trust that we'll offer with high integrity and we'll always put shareholders first. And that's how you're going to run the business. And that means at times when the market is running and people are doing things that we're not doing, we're like, why aren't you doing these things? But a great example of that, convertible debt.
Yeah.
Convertible debt is debt. It is not equity. It is only equity if it gets converted. If it doesn't, it is debt. And so like my biggest fear with all these treasury companies is if they bring on too much debt and they're not thoughtful about how they manage their capital market strategy, because most of these folks don't come from the capital markets world, and they blow up, that will be a system-wide kind of event.
This is my question to you, because we've asked quite a few of our guests on the show, what's your opinion of these digital asset treasury companies, DATs? They actually have an acronym now because they are so popular. Whether or not, to Gerald's point earlier, are they operationally efficient long-term? Are they a bubble? As someone who has a part treasury company as part of their business, what is your advice to people who are thinking about getting into these treasury companies? Is it diversify? Don't just accumulate and issue convertible debt, have a strategic outlet where you can kind of turn to another business if all else fails. Do you see this existing in the long term?
So the issue with creating another business, if like the treasury doesn't exist, is then as a shareholder, you're saying, I have a lot of slippage in my dollars going in because you're trying to fund these other things that may or may not work. And as a result, like if I invest $100, $100 is going to buy Bitcoin, like MicroStrategy is very simple. They have an operating business that's cash flow positive. So they're able to run autonomously without having to raise capital to fund that business. Then every dollar coming in goes straight into Bitcoin accumulation. It's simple, it's clear, investors know what they're getting. When you start muddying those waters, then people are saying, okay, I give you $100, $5 are going to pay people in the company, $10 are going to fund your little side projects, and really at the end of the day, only $60, and 60% of that is going to accumulate Bitcoin. And people don't want that, is our belief, right? And so that's where, like, in our minds, having this Bitcoin mining business as this like MicroStrategy, like self-fulfilling, where we can buy Bitcoin at a discount, and we can add in our cost of running that business towards done. That's a self-fulfilling business. The treasury is kind of pure. And then we have these other licensing deals and so forth that we do too. And again, the Trumps have been great at that. And so, and learning how to do that.